Started talking offline a couple of seconds ago, and you're traveling, right, and meeting clients around the region. And I said, look, what is the main thing that they want to know from you, and what are you telling them? And you have a very, very interesting theory about how there is apparently some method to all the madness with tariffs. Explain.
Yes, so in fact, the main reaction I get from clients is that they feel all these policies that they hear about are very erratic, they don't make sense. But in fact, they all boil down to the challenge that the U.S. feels about its leadership in technology and how China is challenging the leadership of the U.S. In technology and innovation. Without the U.S. being a leader in that field, the sustainability of its debt, its dominance in the world financial markets, and the importance of U.S. dollars and U.S. treasuries is getting challenged.
Interesting. We were talking how, over the weekend we had news of yet another agreement between the U.S. and China, which I'm sure you saw reports of as well. And essentially, what it allows is China to continue exporting magnets, rare earths, critical minerals, etc., to the U.S. and not just for defense purposes. I think that's never going to happen, right? What's interesting is that there were no details about what the U.S. had to give in return in terms of easing restrictions on China that they've already imposed. What do you think was the quid pro quo? Do you have any sort of sense?
Well, China needs the U.S. markets. We're going to see today what the numbers for PMIs show in China, but certainly China has tried to replace the U.S. market and some of the European markets by extending its trade with BRICS Plus. But those markets, as important as they are and they may be in the future, cannot really replace the demand that it had in the past from the U.S. And so I think the discussion would be how much access China will have in the U.S. markets going forward. On the other hand, China holds a very strong negotiating chip at this point, which is rare earths. And the U.S. needs that to promote its energy, its technology ambitions.
Yeah, the other sort of leverage that China has, which I don't think it's ever threatened to use, but potentially it could, is something that you talked about, right? The massive Chinese holdings of U.S. treasuries. We've seen what's called the indirect bid for U.S. treasuries, right, from foreign countries. That's been fading, including from China, including from Japan over the last several years. Do you think China would ever use that? As a way to, they would weaponize their holdings of U.S. treasuries. Would that be counterproductive? Because, I mean, the simple answer is, look, then they would literally be shooting themselves in the foot and hurting the value of their own portfolio of U.S. treasuries.
I don't think that would be a tool they will resort to very easily. It's hard to replace the U.S. dollar as a reference currency in the world. There isn't really any alternative with the depth of the markets of the U.S. treasuries and U.S. assets. Also, China, and not only China, but also the rest of the world are invested not only in U.S. treasuries, but also in U.S. equities. And so a run on U.S. treasuries will also lead to a collapse of the equity markets, and therefore they have to lose from both sides. In effect, U.S. is the quintessential too big to fail case. So disentangling from the U.S., it's not going to be an easy task.